Cloud. Okay. Well, let me just put this out there then. This is the well, it's always a split between our weekly call with the property, but we always include the general partners in this call, and so this is our monthly GP call as well. So, in addition to what will most of the call be our regular cadence of the things we go through, occupancy and delinquencies and uh, lease up activities. We'll save the last probably 10 minutes just to quickly go over the P&L for October. So, other than that, we'll kind of, well, I'll give it over to Michael and you can start us
Yeah.
off, and I guess we'll just normally go through Jessica's stuff like you normally would.
Yeah. So I think what I normally like to do is just kind of go through and give you guys a summary of what's going on the property, what's going on around us. We had it's good news from the standpoint that the North Tides has officially been renamed the Junction. There is a new group, a new property management group running this property for the lender at this point. So while it hasn't officially foreclosed in the sense that we have the final who is going to absolutely be running this, we do have a good property management group that is taking it over to get it back in line for the lender. And my assumption in talking with both of them is that this group that's running it isn't necessarily going to be the one that buys it, but they've done a lot of work together. I think that the lender is trying to get the property back to a place where they're not underwater on their loan. And so they're using this group to see if they can do it. I actually have a meeting set up with them on December the 3rd to meet with kind of the head of operations for the property management group to talk about what they're doing, what's going on. We were going to meet today actually, and then they had a last minute meeting to needing to change our meeting. So from that standpoint, it's good news. It's the beginning of the change that we need for that property. Where I would go into a challenge from that is that it also means that we begin kind of the most difficult part of our challenge for the next probably 6 to 9 months of just going to battle with two properties on both sides of us. The Junction, when I last spoke with them, now they may be just a little higher now, was around 15 to 20% occupied with high delinquency. I know that they have been kicking a number of squatters out and trying to clean up and do some different things like that. And I think that we may have felt a little bit of that because a squatter gets kicked out over there and tries to see if they can penetrate our defenses, and then we end up catching them very quickly and saying nope, you need to move on down the road. So, we've got some of that going on. I think from the standpoint of traffic, I like where we're going with traffic. We're actually getting leases, we're getting people to start moving in. The hard part about it is right now, traffic has been what I would call heavy enough to mainly offset people that will be moving out. And you'll see that in some of the move ins and move outs over the next couple of weeks, where we have, potentially, I think it's 11 move ins this week and, or this coming week. And then we have 5 move outs, and you go, oh, okay, well, we're going to net 6. But then the next week, if we don't get any more leases, then we lose 6. So we net 0. That's the hard part of where we're at right now. So they're still hearing about parking as an issue, from the management standpoint. I'm taking it upon myself to go back out to all of the empty landowners that are around the property to see if I can make some sort of a parking deal. Even if we have to take a little bit of money and go and make a parking lot, for example, to help with our overflow and make an agreement, that's what I'm trying to work on. The reception I've received to this point from those landowners has been tepid. It's just not been well received. They don't want to mess with their land. They, don't want to take any chances. So what I've been doubling down on is kind of showing them an example of what we would do, how it would actually improve their property. It'd be less, mowing, less different things. If I brought gravel in and we set up some little parking curb stops and put a couple of entrances in to try to help them see that it actually wouldn't be anything permanent that would damage the value of their property in any way, shape, or form. And I'll keep you guys posted on that as if I make any inroads with any owners. But so the good thing is the thing that we've been wanting has started. The bad side is for the next 6 to 9 months, it's not going to make our numbers great. We're just going to be battling, and we're going to be trying to say, hey, what can we do to overcome what our competitors are doing? And some of that's going to be rent reductions, some of that's going to be concessions and seeing the directions they go. While the bank owns it, the North Tides, that is, or the Junction, I'm trying to take advantage of before they are allowed to go and maybe cut their rents because they're still cleaning house. So Jess and I have been meeting weekly, if not bi-weekly, and looking at what's working at McCallum, how many units are we leasing, which ones are leasing, do we need to lower the price on some of the renovation units we have because they're not moving to a price that makes them extremely attractive. So those are all the things that are going on behind the scenes, along with all the marketing. The group in the office is doing direct marketing. We're getting out to locators. We're changing up things on Google SEO, to maximize it. I think they've had 25 plus reviews on Google in the last month and a half, which is helping us move up on the Google sheet, from the standpoint of how we market or how we show up from a marketing standpoint. Apartments.com. I'm still working on the geofencing thing. It's not like a speed demon type thing with regard to how it gets set up. So I'm waiting on something from that group at this point. And then, just on the other side of looking at, what are some of the things that cost us to lose people? Parking has been one. Our neighbors around us has been quite a bit. And then, the other thing is job losses. And I think, Brooke, we were talking about that with you just a minute ago, when you have job transfers or job losses. So I've even met with this last week a company that provides insurance for people that lose their jobs. So I'm exploring, hey, what if we had an insurance program that provided people up to 3 months worth of their, rent from an insurance standpoint, and they would pay, $8 to $10 a month for that. It doesn't sound, I don't want to ding people with more fees, but at the same time, if it's something we can offer and it makes it where we have residents that have some form of stability coverage with us, it's something to look at. But the most difficult part of it is it all comes down to W-2 pay and timing. So there's a lot of intricacies before I can say, hey, we're in on this. But it is something that we're looking into as well to say, hey, how can we cover some of our revenue basis from a protection standpoint? This month with regard to, revenue, other income, revenues down lower than we'd like. Operating expenses were up just a little bit, but not too bad from the standpoint of where they were overall. We had some, just additional costs that creep in on occasion, and then they ebb right back down the next month. So I'm not seeing anything that's out of line there. The biggest thing is that our net income was negative this month without a one-time event that we had occur. And I'm not surprised by this. It's not something totally out of a line for this month. And we probably will have a couple of more months where I think we'll be really close to break even on net income, or maybe slightly under. And, some of that's just due to just timing at the end of the year with some bills and some extra things that are popping in that are just eating away some of those additional funds that we had up until this last month or so. Jess?
Hey, Michael.
Yes, sir.
Couple things. Now with the Junction and the new owners which is North Tides, you'd mentioned that we've identified who these buyers are and all of that. I think one thing to make clear is, just like with the South Tides, we have the new owners identified and they're managing things, but until they until those deals actually close, those people aren't putting any of their own money
No,
into lifting these things up and giving them a
yeah,
facelift, and they're just coming in and making sure, some of the bad actors get pushed out and evictions are happening, and are just,
right.
doing the management of it without necessarily
There,
making an investment in it. I think
there's
that's the
no
big
major funding,
difference.
David.
What's that?
There is no major funding coming in. I think the biggest thing I would tell you at the Tides North or the Junction is it's what I would call minimal cleanup at this point, and it's more just to make it look a little better, but it's not massive crews in there doing anything to the buildings yet. Now, do I think Argentic will, that is the lender, will do some of that? Yeah, I think they'll give some budget money over to the property management group to start doing some things. I just don't know how much investment the lender wants to be able to make on that. So it's going to be a blend. We're gonna be testing it out. My main thing is if they can get it looking decent on the front and not have the squatters roaming around, um, that still helps us. Regardless of how full that property is versus us, the cleanliness of it and the less chaotic it is, the better off it is for us. So I would say that's 75% of what we need there to help with our stability to some level. Um, the next part will come when Argentic has to figure out how low the rents need to go to be able to attract people, and that will be on them. And I'm sure they're going to quiz me about it next week whenever we get together, and I'll try to make it sound as minimal as possible of what we're doing rent wise. But they'll be able to see. I mean, we all can kind of see each other what we're charging for rent, where we're at. Like I said, for Jess and I right now, the most difficult part is we want to take more market share. So it's finding the pricing that gets us more market share than just staying afloat. And the hard part is monthly you don't know when someone's going to lose their job or when they're going to say I don't feel like paying rent this month, because it's rather sporadic. At times you have great payers that all of a sudden just go quiet on you and then they've skipped and you're going, what happened? So we've had some of that. This month has been actually one of our better months for skips. I think Jess even has it's one so far this month that's a skip. So it kind of goes back to what we were talking about of how tough we've been screening, in minimizing the potential for skips coming in. And I'm hopeful that that's a great sign, as we go into the holiday time frame, that we won't have quite a few more, just due to the fact that a lot of people try to stay in place as much as possible, during the holidays.
And
But
then I was thinking that the junction had around 50% occupancy, and I thought I heard you say 15.
it been 15 to 20%.
Oh my God.
Yeah.
That's their
Okay.
estimation after they think that they get everybody out, that their actual occupancy based on avid rent payers is 15.
Yep.
Wow. Wow.
Yeah. So
Wow.
for us, this is a
Whew.
it's like having a new build C property right beside you
Man.
that has to be, of course, redone for the most part, internally and externally. But yeah, I mean, we've got one beside us that's in the 60s and another that's in the 15% range. We're at 80, 83 basically, and I don't like the number 83. When I look at those two surrounding us, though, I feel a lot better about that. But I want to be 90, 91, 93, those are the numbers that we want to be. We're right now we're in a battle, and it's a daily battle for that team. How do they stay up? How do they stay ahead of the comps? How do we make sure that our team, um, when they're meeting with a prospect, how are they closing? And Jess and them have, we have a third party group come out and every so often do a check of all the wording and everything that our teammates are using that are on site. We haven't had one come back that's below 95, on their score out of 100. So, for me, and this is third party, they don't know when they're being shopped. It's not like it's a CAF employee. It's third party company that's, designed to come out and tell the truth of what's going on. So I have little doubt that the team itself is on top of it with regard to the leasing when they get somebody in there. It's getting somebody in there that has a budget that can afford to be there. That's not coming in at, $750 a month is what their total out of pocket budget is. And no one's, in that range, in that area at all. I'm going to reference a podcast that I listened to the other day, and it was with Jay Parsons and Willie Walker, and Willie Walker's the owner of Walker and Dunlap. They were talking about what they call the trickle effect, in apartments. And one of the things that all of the DFW area and many, many other areas has been affected by is we have so much brand new product that's come out. You're going, well, how does that affect a property like ours? That's, 1980s build. Well, what happens is all this new product comes out and they offer all of these specials to fill up. I mean, months free, things that are insane with regard to why would I not move from my 10-year-old product, my 5-year-old product to this brand new one to get 3 months free. And then what happens is that your 10-year-old product, your 5-year-old product then has to lower their rents and they have to give concessions. So then everybody in the 1990s and the early 2000s product can now go live in this 5 to 10-year-old product. And so what's happened is in the area, we've had a shift of people also trying to move to a different layer of these newer apartments. And what it does is there's not as many people that are looking for apartments that are coming up from an apartment community to move to one like ours. So our pool is stretched a little bit right now. Now, the expectation is that because of absorption in the market, that the absorption will actually help settle that back down, and we'll start having people move back into apartments built in the 80s that have been rehabbed, for example. But that's another one of those 6 months to a year type thing before we see a lot of that absorption effect taking effect, because you've got all of these new places that offered these 1-year deals, and we've got 6 more months to 9 months before those even expire. And then you're back to finally shifting people back into apartments that are our age. So it's a weird dynamic. And I'm I know that our micro pocket is the main cause of our issues, but I think that we're seeing this across Dallas as well, where people are shifting, and it's an ebb and flow. They shift out, and then a year later they start shifting back in. And as long as permitting and new apartments aren't being continually built, and that's the thing is right now there's not nearly as many scheduled apartments for 2025 to come online as what there were in 2024. So there's kind of some of that effect going on as well that we need to be aware of from a market standpoint. All right, I've talked enough. I'm going to let Jess go through, numbers, and then we can bring up questions we see from there. And Jess, please take it away.
Okay, everybody see my screen okay?
Yep.
Awesome. So landing at McCallum is currently occupied at 82.5. We are pre-leased at 85.6 out of our applicants that have signed leases. So they are guaranteed. Our pre-lease percentage is a solid 84.2. We originally delivered 42 rent notices this month, and out of those, we only have 9 that are remaining. 2 of them are some of our higher balances with appeals. 157, we were able to file the writ, and we are just pending the constable on that one. We would assume that it would probably be after the holidays. I've never known a constable to come and perform a writ a day before a holiday. So we're assuming that it will probably be early December for that one. And then our main master squatter, if you will, 371, she finally has a court date for her appeal on the 4th of December. So hopefully we will have good news to share after that.
I swear this should have been a lawyer.
Yeah, she's definitely done her research for sure. Our total delinquency is $44,008, and then our 9 evictions in process. Oh, and I apologize. The remaining 7 have a court date of the 13th of December. Our 9 evictions in process make up 37,000 of that 44. And like Michael said, we've only had 1 skip so far for the month, which is great. And we have 35 units on notice over the next 60 to 90 days. As far as ready product, the team is working really hard to try to get some additional product ready here. So we kind of broke it out for you by renovations, classic pluses, and classics. But overall, we have 61 total vacant, 21 of them are rent ready. We expect to have 5 more online this week and then 6 more online the following week.
That's good.
Yes. As for total leads that we received so far for the month of November, we're at 219, and we have had 9 new leases signed out of that. Rent growth for new leases kind of stayed the same. We are, like Michael said, trying to keep rents as competitive as possible on those new leases, but renewals, we were able to get a 3% increase on our lease trade out there, which is great. And then over the next 7 days, we have 11 move-ins that are set and 5 move-outs that are set. And then over the following 7 days, we have 0 move-ins that are on the schedule and 6 scheduled to move out. So right now we're breaking even over the next 14 days, which just means that any additional move-ins that we can get over those next 14 days will be straight gain. We currently have 38 open work orders. 19 of those have been open longer than 3 days. The team, we are actually now fully staffed, which is great. Our last candidate, we got approval for him to start, and I believe he started this morning. So I know that our lead has kind of been showing everybody the ropes, and so we should see a significant decrease on these work orders as everybody kind of gets used to their new responsibilities, but we are super excited to say that we are fully staffed.
No doubt.
As far as, I know we kind of went over the renovations and the classic pluses, and then the projects that we're currently working on is to fill in the spa at the main pool to be able to get that back open. So those bids are pending review. And then we are also pending bids on a couple smaller projects such as gutter repairs, the decking by the front office that is getting a bit warped, and then pothole repairs are being completed in-house. And then for resident,
I think the decking by the front office is because of that tree that's.
Yeah. So
Okay.
David,
Yes.
what I've been talking to them about is actually cutting kind of a circular pattern around that, and then us potentially putting either some form of a DG or some type of something that we can pack in there that would actually maybe move with the tree a little bit more, but make sure it's done in a way that's decorative as well and not a trip hazard.
Right.
So we'll definitely be talking about that shortly to get that figured out as to exactly how big around it needs to be.
Absolutely. For the month of November, our resident activities, we had a Nacho Average Wednesday, which was a nacho bar that was kind of a grab and go in the office on the 6th. We had a gingerbread cookie social on the 21st, which was a gingerbread cookie decorating event in the office. It's always popular with the kiddos. My personal favorite is actually today. It's Holiday Pie Day. And so we'll just have everybody's favorite pies in the office for them to come and grab a slice. And then all month long, we've been doing a Toys for Tots drive. So we've been encouraging the residents to bring in any unopened toys that we can donate right before the Christmas season. And then also for November, we donated a Thanksgiving turkey dinner from the Honey Baked Ham Company, one nominated resident and 1 nominated team member. So we were able to bless them with a Thanksgiving dinner prior to the holiday.
That's awesome.
Yes. As far as specials, we are doing 6 weeks free on outright approvals. We are splitting that in half between the 3rd and the 6th month. If they are approved conditionally, it goes down to 1 month free, and we are also splitting that between the 3rd and the 6th month. And then, as Michael mentioned, we also are reducing rates on select units.
And then, the thought, guys, just so you know, on the, if we're giving 6 weeks, it part of it's, if it's passed with conditions, they may only qualify for 4 weeks of a concession. And the other thought is that the reason why you split these concessions out and move it to the 3rd month or the 6th month is to minimize giving the concession out if it's someone that's not going to pay you. We've had a number of people that in the past, you learn lessons. If you give the concession away in the 1st month, then they're going to let you give them free rent. And then 2 months later, 3 months later, you're evicting them. And so if they can't afford to pay you anything the first couple of months of living there, then they probably were going to skip on you anyway, or they were going to be evicted. So the thought process is let's move the qualification of when you can get your concession to a little bit later of a date to help protect us a little bit from those that would be just coming in to get free rent for a couple of months.
And I might add that this is in comparison to neighbors that are offering 2 months. So, before anyone thinks we're giving away the store, we're giving away a lot less of the store than our adjacent competitors.
And that doesn't even include the neighbors that are the ones that are in trouble yet either, that haven't really got it going. I mean, I think like David spoke to earlier, they don't have any of their money invested yet in this game. So, from that standpoint, they're kind of at the whim of what the lender says they can do. And if the lender opens up the floodgates, they could offer 3 months for all we know to get filled up. So we're right now, our goal, from the Hampshire side and the CAF side is to say, let's beat them to the punch. Let's offer what we can as a lowest price that we feel like gets a lot of people in, but at the same time isn't giving the farm away at the expense of just filling up.
Maybe this was discussed previously, vaguely, I think with Sanjay. Did we ever look at what the cost would be to purchase them and take over that whole block and own the block?
Yeah. So another gentleman as part of Hampshire, we actually were on several phone calls with Argentic, the lender, about that. The problem is that Argentic, the price that they want to sell it for is basically what the loan is still. They're not. Exactly.
That's such a trend. I'm so irritated with this trend, man. I'm because
the
annoying.
lenders,
They're selling out of distress, essentially. That's it. They just need a bailout.
The lender's loan value is about $105,000 a unit, if that tells you anything. So would they be willing to come down some today? I'm sure they would, but when you do the math on it and the amount of construction that would be needed for that property, you're closer to 50, 60,000 a unit from a value standpoint of what it would take to buy it to make it make financial sense. We actually looked at it from 2 standpoints. One of, hey, what if we convert it over to 2 bedrooms, and make it we don't have as much 1-bedroom competition in the area. And unfortunately, you'd have to get an even lower price for that. So yeah, but there was no mathematical way based upon any offer anybody would take that would allow us to buy it and then make profit off of it in any way, shape, or form. And
so you're just going to have to wait essentially almost until they foreclose or something and go and deal directly with the bank. Like they're going to wait to the last minute, and that's what I'm seeing people do.
Yep.
You all want to whatever.
This Argentic lender has a relationship with this new property management group called Summit, and they've done a lot of deals with them over the years. And so this is like a, hey, will you do us a favor type thing? Come and manage this place. We'll pay you a property management fee. Do what you can to get the value of it back up to where we can trade it. And then I'm sure that what they've done is Summit's purchasing wing is, trying to probably decide, hey, is this a property that we feel like that we could get and do something with? And
Right.
that's where my guess is they're getting a free evaluation as to whether they want to buy it or not.
Got it. Yeah. Well, what's going to happen, as I'm sure you guys are going to see, is they're going to wait to the last minute and they're going to get the short end of the stick. Oops. And that's what too many people are doing. They're selling out of distress because we've been looking at smaller units. My husband and I, 32, 64, anything that's like under 10 million, under 8 million, and everybody's selling out of distress. Listen, they don't even give a crap about the profits. They're selling out of pro forma. They're selling out of a bailout. And it's like, you know what? All you can do is keep tabs on the ones that we're interested in and
Yep.
stock them. And that's it. And check in with the banks, check in with all of them. And then it's like, come hell or high water, they're going to have to sell. It just
At
is what
some
it
point,
is.
they're going to have to, because Argentic's going to they're going to have too many on their books. People are, anybody that's got tides, loans that are coming due, all of those groups, yeah, they're all going to have the same problem. And what we're, the thought process is, usually in a presidential election year, I see a lot of people sit on stuff because they want to wait until this election's over, and then you're in a holiday season. Well, nobody trades during that time frame. My guess is this first quarter we'll see quite a bit more activity starting again, and what's going to happen now. Where the lenders are is the big question. Are they being realistic, or are they still being given enough rope to say hang themselves? Are they just going to continue ebbing along?
Come on, dude. The lenders are ran by the government. They're not realistic.
I know, but you know how it is with
Wishful thinking.
well, when you all of a sudden you get a new Treasury Secretary, you get something
Right.
going on, and they about face on exactly how this is being looked at. And so that'll be the question is there enough of an about face because of the change in the government on the way that some of these loans are getting treated, that they'll say, hey, we got to start moving these now. We don't have the same persons looking at it that were before from a government standpoint. So I don't know that answer. It's possible. But yeah, I think it's if they don't have enough on their books to make them nervous enough to say we need to get out, then they're just kicking the can down the road, hoping that the values will come back enough to where in 2 years they'll be happy they kept it. I think it's a lot of wishful thinking on their
And they're gonna wait, and we're on the same page. That's what they're gonna do. They're gonna wait until they're pushed back on their heels, and they're gonna be forced to make a decision that they don't like, and then they're actually gonna have to take an L, and that's gonna be on them. So it is what it is.
To be honest, the lenders that are more heavily involved in office space, those are the ones I worry about more than anybody, because they've got trillions on their books and they're not getting office space rented. If they've got family as well, those are the ones that I would say I wouldn't want to be investing in those banks.
No, I wouldn't either, because looking at the job economics and everything, people want either hybrid or they want remote. Hell, now with the presidency and economics, what is happening now, a lot of people are looking to be an expat. People are looking at, they're looking at international travel, whether it's Yucatan, Merida, even San Miguel, which is like, 35-40% of American expats. A lot of my corporate people, they're already putting in their submissions to work in DR, to work in Europe, to work in Mexico. And it's like, y'all got to wake up. Anyone who's in that office space, good luck. Good luck.
Except for medical office. That's probably the only exception.
It's great.
Shoot, man, I was even looking at, I've been talking with a few people where they want help with commercial acquisitions out of Merida, Yucatan areas, and even DR. And so I'm like, I am open, and all you're required to do is maybe once a quarter, you might be gone for a few weeks, to run some of it and check it in. But come on, like they need to either wake up or they're just going to take a big L. And the rest of us will be watching from the sideline like, coulda, woulda, shoulda. Too late now.
You're exactly right.
But yeah, I digress. Yeah. So fun. You get to watch the circus.
Yeah.
Grab your popcorn.
Very interesting to watch the circus. Yeah.
Right.
And that's what Jess and I talk about. You know, we've got circuses going on around us. We need to create stability and
Correct.
and tone them out, pretend like they're not there, and do what we can to say, okay, we can only control what we can control. Let's focus on that.
There it is. And only acquire if it is cash flowing now. That's it. I don't
That's
give a
right.
crap about your performa. I don't give a crap
Bingo.
about what your plans are. And that's my biggest irritation. Like you can
Yes.
underwrite 100 deals and you're going to get one, because everybody, I think 60-70% of the multifamily right now, dude, they're all selling on performa. And I was like, I don't give a shit about that. What is, he's not even cash flowing now. Y'all are in the hole, or they're sneaking in the T3s, the T12s, and all the financials and insurance payment. I saw that a couple of weeks ago. I'm like, how the hell, where's the fluctuation? And they had a fire, and they made it, and they incorporated that into the NOI. I'm like, y'all are shady. I'm out.
Yeah, no, that's a no. But yeah, it's, I mean, I agree with you. I really wish that our apartment purchase fundamentals would get back to trading on the way that someone has them running them as of today, and not for us having to go and say, what all can we do to maximize the value before we buy it, and hope that we can turn it into something that is well beyond that. And
Hope is not a strategy. No.
those days are fleeting away quickly.
I think we're all in a position where nobody is buying the hype anymore.
Nope.
Everything has to be real and provable, and show me the money, and
right.
hopefully that's a good thing, because a lot of that irrational exuberance, it distorts markets in a bad way that causes problems down the road. And so getting back to some rationality moving forward will be good. But like you say, it's painful. And a lot of these, lenders, especially, that are underwater, and they are unwilling to step away from the table, if you will, like a gambler who wants to double down and try and pretend he hasn't lost money. They really have no choice, and the sooner they accept that, and the sooner things can return to normal. But
well, it's one of the reasons why Eddie and I and Shane and Nick, we're out building product in Florida and in Kentucky. Either BTR or build to sell type product, because from that standpoint, it's the only way we can see that we can right now use money in a way that if we build it, we can sell it based upon the way it performs when we sell it, and make money, and not have to worry about creating weird pro formas or anything out of stretch to get a profit off of it. Because
a big difference between creating value and building value.
Exactly.
There you go.
Exactly. And so
I wanted
to focuses we're tying into.
Eddie's been trying to jump in for a minute.
What's
Yeah.
that?
It's like a game of double dutch.
Yeah, I'm telling you. Can't get a word in edgewise.
Go ahead, Eddie. Sorry, we all got talkers on this call. Go ahead.
Can't even get a word in edgewise, even if you raise your hand. No, I wanted to say, you made a couple comments about lenders, and I've got a good friend in Arbor and a couple other large lending groups. And these guys, they don't have the leisure to make decisions on their own. They're being instructed by the government that you cannot release all these foreclosures into the market, because what would happen if you took Arbor, that has 70% of the portfolio, and they released it in the news that it's all underwater? There would be mass turmoil. I mean, you would probably have riots in the street. No BS.
Absolutely.
Wall Street would flip out.
2008,
Absolutely.
2008 all over again.
Right.
What it basically would be on the CMBS side.
So
yeah, we can't do that.
They are physically being told to hold these things, and they're physically being told, just hold on, we'll fund you, we'll pay you to hold them, but you have to release these in a trickling effect. You have to slowly drip these out of your portfolio, and then negotiate with the people that are currently running them and the people that are interested in buying them. But they still have not got to a point where they can take a bath, because that bath goes on public records. What it sold, that goes out, That's another way the public gets a hold of the information. So it's just a holding period, and it's up to
It
the
is.
government until they finally say, okay, release 10,000 properties into the general public.
Oof.
And it's the hope.
That's smart though.
Eddie,
It
it's
is.
the hope that they're going to regain their value again and come back to where they can start making payments. And that's what I think the government is hoping for. Hey, trickle these out that are your worst, and then let's hope that over time these get back to some form of health.
Now, the funny part about all of this is I know we all go to a lot of conferences and stuff like that, and I still do, but when you go to these conferences now, the room is all new people, but all
Right.
the people that came out of coaching programs, the seasoned professionals, they're all raising capital for gas and oil now because they're bored.
Mhm.
That is a field that I would get into, that I've heard great things. I'm not educated enough on. I did attend something on that, but that would be in the future. That's why we're in acquisition of a Starbucks right now in Omaha, Nebraska, and the triple nets are the only thing that I have that are no fuss, no muss, no BS, instant cash flow after close. And that's it. And they purchase, like a Starbucks, for example, you purchase usually for about 3 million. And they'll cash flow like 170, 180,000, and every 5 years you automatically get a bump to keep up with inflation, and it's so risk adverse. And that's what people want. We're sick of not getting cash flow. Everything's increasing and we're busting our tail to acquire these properties and execute a business plan. And then you got people like the Tides and whatever they're called now that
Yeah.
are just failing horribly, which makes our job so much more difficult. And it's
Yep.
like, holy
And
shit, it's just a domino effect.
And to
The
think
biggest-
just a year ago, the Tides was the darling of Wall Street. Hey, let me just try and bring this back a bit, because it's quarter to 11
Right,
now.
right.
I've just got our monthly, occupancy trend and P&L slides, and I'd like to just go through them quickly. Not a whole lot of not really much to talk about, but I just want to check that off our list. So I'm going to share my screen righty here. All right. Okay, can y'all see my screen with the investor update?
Yep.
Yes, sir.
Let's see here. I'm not going to go over this because we went over this a lot on the last call. If you've got questions about this, we've got a recording from the last call. Just wanted to just reset everyone's mindset as to where we are in the middle of two big anchors that are dragging us down. So I won't go into that much more than that, but in terms of occupancy with October, like Michael and Jessica have said, we've gotten to a point where we bring in 6 and we have 6 leave, and we bring in 5 and we have 5 leave, and we're still winning new occupants, leasing, signing leases, and winning some of the market share, but we also have people leaving at the same time too. It's the slow part of the market, a slow part of the year in terms of the timing, but we seem to have leveled off. We did really well, and we had gotten up to 90% before all the disaster with the Tides properties. That dragged us down quickly. By September was the low point, and we've kind of been stable from that point at 82%. So that's the only point I wanted to make with that. Next, in terms of bottom line, not operating income, this was the best month like ever. Of course, the biggest, with almost 453,000 of net operating income, nearly double what we have been doing per month. But a big part of that was we were finally able to book and record the property tax rebates that were actually won a couple months ago. We knew about it. Actually, we knew about it even last quarter, but finally able to record and recognize that. So had it not been for this, we see negative 200 for real estate tax. Normally it would have been 50, so it's a total swing of 250,000. Had it not been for that $250,000 swing, our net income would have been 200 instead of 450-ish. So that would have been worse than we've seen June, July, and August and September, but better than we had seen the first 5 months of the year. And as you can see, why it's the we had taken basically a 22K, 23K reduction in income from September, with a couple things going on. Vacancy, we got hit with some worsening vacancy, and then also the other income often related to that lost vacancy. So
yeah, and concessions has picked up over the last couple of months as well.
Right.
And that's going to be something that'll hurt our revenue for the next several months, just because we're having to give so much away. It will, as we even fill up, we'll have so much in concessions that you'll sit there and go, hey, why aren't we making more revenue? Well, it's because the concessions are offsetting our gains. And then what happens is, after 2 or 3 months of it, you finally start breaking through that. Oh, I got my concessions are out, even though I still have them. I may still have them, but I'm finally making money on these people that we've brought in and had to offer these large concessions to. And even though we are offering the concessions to the people in the 3rd month and the 6th month, we're having the concessions booked in the 1st month that they move in, from an accrual standpoint, so that we can get through it all, and say, hey, look, our concessions are what they are. This is how they sit, so that they book early for us. And then the beauty is, if someone wants to skip on us, let's say in the 2nd month, and they haven't gotten to their concession yet, that concession will be booked back off and reversed.
Right. So that's really the only point that I wanted to make. There was a few things. Water and sewer was unusually high, and those were just accounting catch-ups from a previous month, and a little bit of a longer cycle. But otherwise, our numbers were very consistent, month to month. So not anything to write home to grandma about. Same thing with our non-operating expenses. I mean, we have our normal 130,000 a month of debt service. CapEx was very light at 36K, and everything here, the franchise tax and asset management fees are the same every month. By the way, this column I'm looking at it's only 1 month, where the rest of these are 3. So keep that in mind. And then here's just a detail of the CapEx. It's unit upgrades much lower than what we've done before, and then some appliances and a little bit of HVAC. So that is really all there is to talk about in terms of the financials for October. I just wanted to make sure we covered it, in this call. So, were there any questions?
No, sir.
Okay, in that case, I'll end that portion of this, and we still got a few minutes left if we've got some general questions or.
No, I just think it is what it is.
Mm.
You know what I'm saying? Like, all we can do is do the best that we can with what resources we have, and ensure that we are trying to stay afloat, try to avoid capital calls, and increase as much cash flow as you can. That's all we can do.
Yep.
The only thing that's kind of frustrating is the maintenance tickets. That's a lot. I'm assuming none of them have to do with AC or heaters, or, with elderly people or pregnant women, because, there's laws on that. So I'm assuming we're staying on top of that, so there's no lawsuits, right? I see Michael nodding his head. Because that's always the first thing I'm going to go to when we have 30, 60, 90 or anything like that, and so many maintenance tickets. It's like, okay, know your tenants, who's pregnant, who's elderly, because that shit will bite us in the ass if we're not on top of it quickly.
That's exactly right. Jess and I talk about that constantly, and we've done a really
Yeah.
good job of getting the counts down into the mid to lower 20s. And from that standpoint, 38, on 417 units, you still don't want that many. Even though
Right.
percentage wise, it's not that horrible of a number, but it's kind of you don't want to take a chance that it causes you to lose anybody from your
Correct.
residency since you're already hurting on the
Correct.
occupancy side.
So
And
what?
I
Go
want to,
ahead.
just a reminder, just to kind of set where we're at. We talk about, just the trouble that we're having with the property and the surrounding area, and yeah, managing it the best we can. But, this property, you say the word capital call, and this is one property, and that we are nowhere near that kind of a discussion.
Thank God.
We're still, cash is fine and income is
Mhm.
fine, and we're actually, had last quarter begun making some at least distributions, pref distributions. So we may not be at a point where we're paying out distributions to LPs yet, but we are, if that's the high mark, and the bottom mark is capital calls and all of these other types of things that we see in other properties. We're nowhere near there either. So we're in a comfortable place, and I just want to make sure we kind of remind everyone of that,
I
because
can
No,
tell you,
that's a good point.
Jess
Sorry,
and
go
I
ahead.
are not comfortable, but from the standpoint
yeah, well,
Good. You should
of
never be
our
comfortable because
no,
then you
you should
become
never be
complacent.
comfortable.
Stay on
but
it. Don't be
but you guys got to
comfortable.
know, I can have a property that's running 92 and I'm not comfortable. 93.
Yeah,
No,
So
that's a
but
good way to be.
there's a big difference between, wanting to, hit your goals, and worrying if you're going to get, the bank's going to foreclose on you, or
that's
the
right.
bankruptcy judges come in, and whatever else. So or having to reach out to your investors and say, hey, in order for us to make it to this, our turnaround plan, we need a capital call.
Right.
So we are far away from that. That's when you really lose sleep, Michael.
Correct. Yeah. As long as you keep communication open, that's all that matters because people talk and
Yeah.
people are concerned and people are worried, especially with one of our other properties. With Amberwood, we had to postpone and, distributions for Q4. And David, you're in the loop on this, because of
Yeah.
that lien situation and the transition of property management teams. And so people are forced to wonder what the hell is going on, and they never create a good story, right? So the only thing that matters, as long as the communication is clear, transparent, we take accountability for any BS along the way. That's
Mhm.
all they really want, because a lot of operators are not doing that. And it's really
That's right.
frustrating. They're painting this pretty picture and it's BS and it's misleading. And so
That's
that is
right.
one thing, right? And as long as a team, we are clear, transparent. This is a situation. This sucks. This is what we're doing to mitigate it. We're not, it's nothing crazy, but we're taking accountability for it and constant communication. And that's all we can do. And that's it.
Well, and I'll end with this. I know we've only got about 3 minutes, but I guess the way I would say it too is, when this property was bought, no one would have ever dreamed that the Tides properties on both sides of us would completely fall apart the way that they have. No one would have. They were the darlings, I think, just like what David said, of everything in 2022. You were looking at them as the model for how great things were going to be. The Tides does this amazing job, and today we're sitting in a vastly different spot. No one would have dreamed in 2022 that we would have had so much building of apartments that it would create a trickle effect, that you would actually lose people in and C plus B minus apartment communities to a product as it trickles all the way up. But it has. And now, again, what can we control and what can we not? And how do we focus on the things that we can control to maximize our outcome? And that's what we're doing.
Right, right.
Amen.
All right. If there's not anything else, I'll stop the recording. Any
All right,
further
guys.
questions?
Thank you so much for your
Yeah.
time. I
Yeah,
appreciate
thanks,
it,
you
Brooke.
guys.
As always, I appreciate your insights.
Of
And
course.
I love hearing what you're seeing as well when you're out looking for deals, because I'm constantly looking with deals with Nick and with our team as well, and it's slim pickings right now.
Correct.
It's not easy to find anything that makes financial sense, and boy, the brokers will tell you different though.
And that's what I tell other people and some of my previous mentees. I'm like, brokers are salespeople. And I've been in sales for years. Okay. You're here to solve a problem, but brokers also have bills to pay. So they're always going to paint a pretty picture, bottom line. And you need to
That's
do your
right.
own digging. Numbers don't lie. You can
Nope.
lead and get excited with a story, but finalize and purchase with facts and data, right? Show me the receipts. But
And
no,
hope they show you the real data.
seriously, man, or
Yes.
have some type of clause that allows you, if I found out you're shady, you know what I'm saying? I'm out, and that's on you. And then I'm gonna blast your ass all over social. Just kidding. But I appreciate you guys. I hope you guys have a
Thanks.
phenomenal
Thanks, everyone. I'm
holiday.
gonna stop
Thanks,
recording.
David,
You too.
Michael, Jessica,
Enjoy
Eddie.
Ohio.
Y'all